Hey folks, how you doing? Let's do a Friday video here. It's quadruple witching day, and I traded the morning session just in the simulator, testing out my setup that I've been trading here and reading the tape. So overall, tape is very mixed today. A lot of indecision in this session, and we were in a trading range for the majority of this morning session. You can see here, that was the trading range and then broke bearish. But I want to discuss a few things regarding the price action that I saw today. And a lot of it was very mixed, and I noticed that the big moves only occurred at very key moments when nobody was expecting them. So basically, whoever was moving these markets was choosing very strategic moments to activate their trades. And boy, was that ever a thing, because a lot of the setups that I trade were happening, but the thing is, when they would happen, I wasn't getting the confirmation I wanted to execute that trade because the volume was lighter than I expected. But then the volume started to pick up later and made the trade more valid. So we'll just go over a couple of things like that happened. So let's use the replay function, and you can see here that the Nasdaq was in an uptrend going into the morning here. We'll look at the 2-minute chart, 5-minute chart, and all of that. On this chart, you're going to see the entries that I made, and you can see here that the first entry I made was a short around 10 o'clock. And I guess I was expecting a continuation move for a second leg down there, but it didn't quite work, and I got stopped out as we stayed in the trading range. And it makes sense that when the market is in a trading range, if it can't see follow through to break out of the trading range, then it's more likely going to stay in the trading range, right? And that was kind of what I got wrong today. Let's take a look at the open. Here you can see we popped all the way above 247 and then initially failed and went back to test the lower part of this trading range. The low 246s was where it was at, and you can see how after that we broke it again with no follow through, and then we moved up to the higher part of the trading range. Now this 247, we tested it very briefly and then couldn't break above it. I was looking for the type of setup where you would see at least 2 attempts to try 247 and then fail, but really what we got was a move up there and then just a trading range bar up here, and then it slowly started to fade. And when it got here, that's when the volume started to kick in and pushed us back down. So you can see how we went all the way down to the lower part of this trading range, and I believe that I took the short here on this bear break, anticipating that we were going to see more lows. So not quite the trade that I was looking for. Anyhow, I ended up stopping out that one for my managed loss. And then we continued in the trading range up. Let's look at how it reacts on the way back up. You can see how we didn't even test these highs again. We couldn't even get above 247. And there was multiple attempts here. There was once, twice, and the high was 97 and 96. We broke it by one tick into no follow through. Now, look at how this volume was so light there. And then we still broke bearish just because there was a lack of demand at these prices. And you can see how we attempted a push above here if you tried to buy that dip, and then you got faked out. And that was me getting faked out again, trying to get long right there. So I was trying to get long right here. Now imagine this. You can see we were trying to push that 247 area here, and it would have been 110 approximately on the futures chart. And you can see how we broke below 96, no follow through, and that's what kind of made me get long around this 100 mark, and I was expecting this to hold. So I kept the stop below these lows, and I was expecting this to hold. But I guess because we were in a trading range and the fact that there were no buyers up here keeping this price in demand, well, I got stopped out on that second leg attempt, and that was the story. And you can see how after that we continued to see lower lows here until we met up with this volume weighted average price here. So yeah, I tried again once more right here for a long trade, and again a lot of this is just me experimenting. So I'm trying to get long here because we saw bear all the way down to the lower part of this trading range, and then we regained the bid, and I'm looking to get long. But again, I think it was too much of an impulsive long because I got stopped out a couple minutes later as we broke these lows. Now here I got long again, and then I got stopped out again because I had my stop 1.5 points below this low. And you can see that the low broke, it was 67.75 to 65.25. So it broke the low by 2.5 points. So right there, that's a school for you to say, when you get long or short a market and you're playing a failure like that, don't put your stop within 2.5 points of the low point. Okay, you want to keep it at least 3-4 points away generally. Okay, that's a general rule of thumb, because you can see perfect example here where we break the low by 2.5 points and then it comes right back up. On the Qs, you'll see that the low was 33 and we broke down to 28. So we broke it by 5 pennies, and on the futures chart it was 2.5 points. So rule of thumb, again, don't keep your stop too close. You want to keep it at least 3, 4, 5 points away from those lows. If you want to be safe, probably about 6 points. Again, I was thinking, because just from experience trading the equity ETFs, generally if you keep your stop more than 15 ticks away, you should be pretty safe. So that would be approximately 5.5 to 6 points on the futures chart. So I got long again after that failure. Now this time I got profit because we managed to see a leg up to test these highs here. At this point I had gotten stopped out, so I had 1 loss, 2 loss, 3 loss, 4 loss. 4 losses right there in the morning. And then I got long right here again. Stopped now below this low, of course, because you can see that we had 1 failure, another failure. At that point it makes sense to keep your stop like 2 points below this low here. And then this setup right here. Okay, so this is the kind of thing that I would trade as a short, because you see how we have a higher high with no follow through. The high of 92, we break to 96, and then we fail it, and then the volume is dropping off here on this pullback. This right here kept me confident to stay in the long trade. However, I did trail my stop up to break even and then up to above this low right here because I wasn't confident with what I was seeing here. Now, what ended up happening, and again, back to the fact that whoever is moving these markets was doing it very carefully and precisely, is that look at how low the volume was on this pullback, and then all of a sudden, massive volume. As soon as we started to trade it back here, we saw the massive volume spike that pushed us all the way down there. And lucky I had the stop right around here, so it cut me out there for a small profit in the trade. But again, when the setup was there, the tape was not confirming it. That's what I'm trying to say. The tape only confirmed the fact that there were no buyers ready to push this price higher. And I guess what we had to keep our eyes on was if there was going to be continued buying coming in around the support zone here, around these 85s and these 80s. But as you can see, there were no buyers there ready to push this price back up. And someone came in and started selling the market really aggressively. And like I was saying, I give the ninja analogy. They're coming in when nobody's looking and they just ninja right through the door and sell the whole thing in one shot. And if you don't, like I said, if you don't have a stop in, well, you're going to end up down here selling it. So yeah. Now, after this, we had a massive failure and we're trading back in the previous range. I decided to get long there again. Now, it makes sense to get long there, but at the same time, it was important to keep watching the tape. And you saw that there wasn't much buying. Nobody's buying here. You saw there was just resistance, 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 and then we slowly fade. A lack of volume, similar to here, lack of volume, and then sooner or later, still seeing no buyers, we sooner or later see lower prices. And then I stopped out of that long trade right there. This right here, guys, is education in regards to trading in trading ranges and price action in general. So I mean, looking at this chart now, you can see that when we had the 2 failures to move below the trading range, that was a decent setup to get long. We had 2 legs up long, and then once we moved to the higher part of the trading range, there was simply no buyers to keep this thing going, and then we faded, but very slowly, and then the bears came in, or the bulls got stopped out, however you see it. We moved down to the lower part of the trading range. Actually, I'm going to zoom in and look at the 30-second candles for this. We had a bear break, no follow through near the lower part of the trading range. That sets up a decent long trade. As you can see, we had a couple legs up for a long. Again, moving to the higher part of the trading range. We see one attempt here where we get 3 pennies away from this 247 area and we fail and we're unable to see continued buying above that area, which signals that there's a lack of demand to push this price higher. And you can see how we slowly fade. Now, this is not a common pattern because normally in the bull market that we've been seeing a lot of the time, we see continued buyers. Every time the market pulls back in an uptrend, sooner or later, buyers come back in to push that thing back up. But today we were not seeing that at all. These pullbacks were not getting bought at all. And you can see how we just started to fade and we're seeing this sideways movement, and then we sooner or later break to a lower low again and again. And it's quite interesting how that was occurring. I think a part of my brain is confusing a retest with a failure. And I need to separate the two because a retest is one thing and a failure is another thing. So in my opinion, right here where I took this long trade, so when I saw this bear break and come back up, I took this as a long trade because for me that was a failure to move lower. But at the same time, I had to remember that this was resistance, and now that we've moved back up, we're right back into resistance. So it doesn't make sense to buy here if we're expecting sellers to still be there. And that's the thing. So if you're getting long on a retest, I called it a failure, but now I'm realizing it's actually a retest. If you're getting long on a retest in a bear trend, we're making lower highs, it's a little bit of a risky setup because you're front running the idea that these offers, these sellers are going to lift and move this price up higher. And again, I think that's just a habit of getting used to trading in bull trends, which we're not in right now. We're in a trading range. Okay. And again, easy to get stopped out because those sellers, if they keep defending these resistances, the sellers just take advantage of it. And you see how we broke to a lower low quite easily. Okay. So again, that's going to be the moral of this video, which is not to confuse a retest with a failure. Now, a failure, I would consider this a failure, where you see low and a low by a couple of ticks and then we're back in. That would be a failure because we can see that we had 2 clear attempts to move lower and now we're moving back up. So this right here categorizes as a failure. This would be considered a retest. This would be considered a retest. And this right here would also be considered a retest because you can see that we're making lower highs. So again, I'm going to keep working on this, guys. I'm still trading in the simulator. All of next week, I'm in the simulator just because I'm trying to nail this setup. And I think that that is so important, guys. It's so important that you take time off of live trading to perfect your setups if you think that there's work to be done. All right, guys, so I will leave it there for you today, and I will catch you in a video tomorrow. All the best. Take care. Bye.